Hey everyone, look around. Gold is absolutely dominating the headlines. $4,956 an ounce. We are flirting with the 5K mark. Whether you're watching this from a penthouse in Dubai, a busy office in Mumbai, or your living room in New York, you are hearing the same thing. Buy gold. It's the only safe haven left. And it feels smart, right? It feels safe. But let me ask you a terrifying question. What if safe is actually the most dangerous place to be right now? What if this price isn't driven by reality anymore, but by pure, unfiltered emotion? Today, in part 2 of our deep dive, I'm going to show you a secret. It's a single chart. Honestly, it's just one number divided by another that proves gold might be flashing the biggest sell signal in 50 years. Disclaimer: I am not a financial advisor. This is for educational purposes only. Always do your own research. If you want to know if your portfolio is about to take a hit, you need to watch this. Hit that like button if you're ready. Let's go. Okay, let's keep this super simple. Imagine the global economy is a person. This person has exactly two moods. Mood number one is get stuff done. When the world is in this mood, we are building, manufacturing, shipping, and flying. We are busy. And what is the fuel for all that work? Energy, specifically oil. So, when the world is productive, oil prices usually stay strong. Think of oil as the price tag for productivity. Mood number two is hide under the covers. This is when things get scary. Wars, banking collapses, inflation. When people get terrified, they stop building and start hoarding. They grab gold. So think of gold as the price tag for panic. Usually these two balance each other out. But to see if things are broken, we use a simple formula. We take the price of gold and divide it by the price of oil. This gives us the panic versus productivity meter. And right now, that meter is broken. For the last 50 years, this ratio, this meter, usually sits around 15. That means 1 ounce of gold buys you about 15 barrels of oil. That is the normal world. Now look at the extremes. Remember 2020? COVID. The world literally stopped. Planes grounded, factories shut, nobody needed oil. But everyone was terrified. That meter spiked to 91. That makes sense, right? Total panic, zero productivity. Now, fast forward to today. Let's do the math live. I want to show you the exact chart. Gold today is sitting at 4,956. Oil is at roughly $64. Divide 4,956 by 64. And what do you get? Guys, that is almost as high as the COVID lockdown peak. But look outside. Are we in lockdown? No. Planes are flying, trucks are driving, the economy is moving. Oil is cheap because there's plenty of it. So why is gold priced as if the world has stopped turning? The productivity meter says we are fine. The panic meter is screaming red alert. They can't both be right. Something has to break. In markets, there is a law called mean reversion. It's just a fancy way of saying what goes up must come down. This ratio of 77 must go back to the average of roughly 20 or 30. Mathematically, there are only two ways this happens. Option 1. Oil prices explode. For the ratio to fix itself, oil would have to jump from $64 to over $250 a barrel. Could that happen? Maybe, but that would mean a global energy crisis worse than the 1970s. It's unlikely. Option 2. Gold crashes. If oil just stays where it is, then for the math to work, gold has to fall. And I don't mean a small dip. We are talking about gold falling back to the $1,500 to $1,600 range. I know that sounds crazy when we are sitting at nearly $5,000. But that is what normal looks like. The pressure is pulling price down. It's not just this ratio. Here are four other quick reality checks. 1. Everyone is in. When your neighbor who hates investing asks about gold ETFs, the party is usually over. 2. It pays nothing. You can get 4 or 5% interest in a bank or bonds right now. Gold pays you 0. Holding it actually costs you money in lost interest. 3. Fear fades. We are priced for permanent crisis, but wars end. Inflation cools. If the news gets even slightly better, the fear premium evaporates. 4. The dollar. Gold is priced in dollars. If the US dollar stays strong, it pushes gold down. Look, I'm not saying sell everything tomorrow. Gold has been valuable for 5,000 years. It's not going to zero. But this ratio is a flashing warning light. The price of gold is telling a story of the apocalypse, while the rest of the economy is just doing business as usual. That gap, that is risk. If you've made profits, maybe it's time to protect them. If you're waiting to buy, patience is your best friend right now. What do you think? Is the panic meter right, or is gold going to $10,000? Tell me your prediction in the comments below. I read all of them. If this breakdown helped you see the market clearly, please smash that like button. It really helps the channel. And don't forget to follow and subscribe to @Zalwora for more no-nonsense insights like this. Thanks for watching. Stay safe out there, and I'll see you in the next one.